All right, today we are digging into the financials of Sunright Limited, a really big name in the semiconductor services world. Now, if you just glance at their latest annual report, you'd see a pretty dramatic story, a company that went from making a healthy profit one year to a pretty big loss the next. But as we're about to find out, the real story is so much more interesting, and it's all hiding in a single line item that, believe me, changes everything. So here it is. This is the headline that got everybody talking. In fiscal year 2024, Sunright reports earnings of 1.8 cents per share. Pretty solid. But then you fast forward just 1 year to 2025 and whoa, it's completely flipped to a loss of 4.7 cents per share. I mean, that is a massive swing. The first question on anyone's mind has to be, what in the world happened in just 12 months to cause that kind of a reversal? To start figuring that out, let's first look at the company's own explanation. Every public company has a story they tell alongside the numbers, and Sunright's no different. They're pointing the finger at some huge, powerful shifts that are happening across the entire semiconductor industry. So according to their press release, they were facing a few big headwinds at once. First, their top-line revenue dropped by about 11%. They say this is because demand for their older legacy products is drying up as the industry races towards these super complex system-on-chip designs, where they cram an entire computer onto a single chip. And on top of that, their customers are all pivoting hard and fast into AI, which completely changes the game. It all sounds pretty logical, right? It paints a picture of a company just getting caught in this perfect storm of tech evolution. And here you have it, straight from the top. The CEO, Mr. Lim, frames it perfectly. He calls FY2025 a challenging year and directly points to that big shift to AI and the drop in their old school business. He's basically telling us, hey, it's not us, it's the market. These huge external forces are what drove our performance. And that's the official story. And this is where we need to hit pause for a second. Because yeah, those industry shifts are absolutely real, but a question starts to pop up. An 11% drop in revenue? Sure, that stings. But is it really enough to explain that massive nosedive from a solid profit into a major loss? It just feels like there's a piece of the puzzle missing here. And to find it, we've got to go beyond the press release and get our hands dirty in the actual financial statements. Okay, now this is where things get really fun. We're going to peel back the layers and look at the raw numbers, because hidden away in their financial statements is the one clue that completely reframes the entire story of Sunright's performance this year. Okay, look at this. While the company was talking about that 11% revenue drop, the real story, the absolutely jaw-dropping number, is right below it. Check out other income. It didn't just dip, it plummeted from over $10.7 million to just $1.7 million. That is a staggering 84% collapse. This is so much more dramatic than the revenue decline, and it has a huge effect on the bottom line. So what on earth is other income? It's actually pretty simple. Other income is just money a company makes from things that aren't its main business. Think of it like a side hustle. It could be interest from cash in the bank, or in this case, a big one-off event. It's not the money they make day in and day out from semiconductor services. It's something else. And for Sunright back in FY 2024, that something else was a very big deal. And here it is, the smoking gun. When you dig into the fine print of the financial statements, you find it. A single gain of over $8.8 million. This was the profit Sunright made in FY 2024 from selling off some of its property, plant, and equipment. This was a one-time thing. It wasn't part of their normal business, and it obviously didn't happen again in FY 2025. This one transaction massively inflated their other income, and, by extension, their total profit for that year. So here's the key takeaway. Comparing the profit of FY 2024 to the loss of FY 2025 is totally misleading. It's like comparing apples and oranges. That 2024 profit was artificially pumped up by that massive $8.8 million asset sale. If you take that one-time gain away, the picture in 2024 looks very different, and the drop in 2025, while still real, doesn't look nearly as catastrophic. The big story isn't just that they lost money in 2025, it's that their core business wasn't nearly as profitable in 2024 as that headline number made it seem. Okay, so now that we know the real financial story, we can look at how the company is actually responding to the operational challenges, the soft market, and the tech shifts. With that illusion of the one-time gain gone, their actions show a clear-headed focus on discipline and control. And their response was real and measurable. They went in and made some significant cuts. Employee benefits, which is a huge cost for any company, got trimmed by $3.7 million as they right-sized their workforce. Other expenses were also cut by nearly $1 million. See, these aren't just buzzwords on a strategy document. This is the company actively tightening its belts to get through a tough period. The CEO really laid out this strategy pretty clearly. It's basically a three-step plan. First, put those tighter cost controls in place, which we just saw. Second, reinforce a stronger operational focus, which is just a way of saying get better and more efficient at our main job. And third, work even more closely with their customers to navigate all these crazy tech shifts together. It's a real back-to-basics plan, designed to build a much stronger foundation. So they've battened down the hatches. But where's the ship headed? Well, their plan isn't just about surviving. It's about getting ready for what's next. Sunright isn't just playing defense. They're positioning themselves to catch the next massive wave in technology, the AI-driven semiconductor boom. And to get a sense of just how big this opportunity is, you just have to look at these numbers. The global semiconductor market is already massive, but analysts are predicting it's going to grow from around $700 billion in 2025 to over $1 trillion by 2030. That isn't just a little bit of growth. That is a tidal wave of demand. And a huge chunk of it is being driven by the exact AI trends that are causing them so many headaches today. And this growth is coming from some very specific places. We're talking about the chips that power AI devices, the explosive growth of data centers, the super advanced electronics in new cars, and all the specialized stuff like high bandwidth memory and power management chips. You know, the little things that control electricity and everything from your phone to a server farm. These are the high-growth markets that Sunright is now laser-focused on, trying to turn today's challenge into tomorrow's bread and butter. And that really brings their whole strategy full circle. After a really tough year of making necessary changes, the company's leadership sounds confident. The CEO puts it best, saying that with all this groundwork done, they feel Sunright is in a great spot to capture that growth as the industry really starts to take off. So that leaves us with the big question. When you first saw that headline, that big swing from profit to loss, it was easy to think, wow, this company's in trouble. But after we dug into the numbers, understood that one-time gain, and saw their strategic response, a totally different story comes into focus. So, is this a company in decline? Or is it a company making a tough, disciplined pivot to get in front of one of the biggest tech revolutions of our lifetime? The answer is going to play out over the next few years, but at least now you know the real story behind the numbers.